Well, risk has been obviously the key concern since the financial crisis for all senior people in banking. And The Banker magazine, together with the business analytics firm SAS, has been holding executive thought leadership program for the last several years, talking to risk managers and finding out what their concerns are. My name is Brian Kaplan. I'm editor of The Banker. I'm here with Alistair Sim, who's the senior director of SAS. Welcome. Now, Alistair, what sorts of things have we been finding out in these series of roundtables and discussions?
Well, Brian, interestingly enough, you said we've been working together as a partnership for the last number of years. It's actually been 5 years. And we started really with the objective of getting into the boardroom, an understanding of enterprise risk management. And I use the word enterprise risk management because back in 2007, the perspective on managing risk was very much a disjointed one, and there wasn't a view that you needed to take credit risk, market risk, operational risk, and in fact get an overall perspective on risk. So starting back then, prior to the crisis, which we all know about, it was not a really hot topic in the boardroom. And of course, we've moved from the crisis in 2007, 2008, through regulatory change, through a crisis in confidence and sovereign debt, and now we are where we are. So we've seen a huge migration in terms of the perspective in the boardroom of enterprise risk.
All right, tell us a little bit more detail about that. So, I mean, at the one time, yeah, I mean, risk seemed to be it was the preserve of the chief risk officer, and the board just kind of nodded their heads. Now it seems as if every single member of the board, whatever background they come from, needs to understand about risk in a very broad perspective.
And that's the important element, Brian. It really has changed. The risk management function was seen a number of years ago as a very detailed, analytical organisation, very detached from the business. And now it's been seen very much as a strategic part of the business. There is studies that have been made that say now of financial services, 73% of those organisations actually have a chief risk officer, and 53% of those actually report to the chief executive. So we can see the increase in terms of the importance. But it's not just the chief risk officer. Chief financial officer has to look at the books and the balance sheet. So in essence, while the chief risk officer is looking forward at risks, the chief financial officer is there to balance and to look at the risk for the balance sheet. But then you've got the change in terms of how we do business. The growth areas of sales and marketing are introducing new risks related to, say, social media. And they're bringing on board themselves the risk. And we need, across the business, to take account of those.
Well, I was going to ask you about that, yeah. I mean, it seems a bit peculiar to some people that, you'll be saying that the chief marketing officer needs to understand about risk. Explain a little bit more about, why it's his or her concern as well.
Absolutely. Well, we heard in a number of presentations when the structure of these briefings have been consistent throughout the 9 briefings that we've done in Europe and Asia, and then going on to the Americas. The chief risk officer, the chief financial officer, and indeed the owner of risk, the chief executive, have been present. But we've also introduced the chief marketing officer, based on what we heard last year, actually a presentation by Allianz in Frankfurt. And they introduced the concept of the business starting to use Twitter, Facebook, LinkedIn, and really taking into account what the consumer is now doing through these growth strategies. So really the communications pendulum has swung from being owned by business to being owned by the consumer. And many organisations are slow to respond to this, and they're not managing that operational risk. And a great example of that can actually be seen on YouTube if you look at United Airlines' example and how that actually impacted on their business and their business merger that they were doing at the time. So if you don't manage the risks through growth strategies as well as the control strategies, you're really not gathering the entire picture in terms of the overall exposure to risk.